So since last stream, obviously the equal lows got crushed, right? The iceberg that was trying to defend the county line ended up stacking up all the retail in the same spot. We made the new lows. There's a little bit of a pump going on that they're trying to hold, but even on the local, you can see we got more equal lows setting up. And there was new icebergs that joined the fray, but they ultimately got dusted. We did get a bounce off them, but I'm not too confident that it's going to lead to too much more. I mean, it might. But as far as the new structure that's forming in the void right now, the fluidity is not too bad so far, but we do have the equal lows. So until we get back above pretty much 99, but 98, the upper parts of 98, let me switch this to white. There we go. You know, it's looking like we're going to 89. Unless I start to see some really nice structure form now that we're in the void. But until that happens, the plan is, unless we can get back above 99, we're going to continue going lower here and making new lows. The good news is, though, there's a lot of stack liquidity at the highs here. So after the icebergs truly got crushed, we started to form all these equal highs. And you can see it on the liquidation heat map. Let me pull it up. It's not as visible on the 48 hour because obviously these lows that we made are pretty recent. But if you look on the 12 hour, there's a little bit of a flood zone forming at those equal highs. So short sellers are stacking invalidations in the same spot. Funding is actually going a bit low here, so people are finally getting pretty scared to long Bitcoin, which means we could go for a nice little short squeeze. The play today, again, the only thing I really see as of right now is a long, but just like the previous times, it doesn't look like that good of a long. If it does come to fruition and we get a nice pump, then we want to see here what happens. If there's a clean rejection here after squeezing out the short sellers that just jumped in today, then we'll see an imbalance of supply and demand, and then we can go and make a new low lower than this low. But yeah, we're getting real close to the final battle here for holding this 4-year uptrend, right? And Ethereum's surprisingly doing pretty good. I hinted at that yesterday, that we could see Ethereum start to outpace, and it actually does line up quite nicely with Bitcoin. But yeah, we could dip a little bit under 89, like I said, but on the previous streams, but we do want to see a pretty quick recovery if that's going to be the case. So something sharp like this is fine. Hanging down there is no bueno. But yeah, let's see if there's any. I mean, the fluidity right now is not too bad. So you have, they're trying to hold the bullish structure so far, right? But the question is, you know, if they don't, what happens next? Well, you've got fragile lows down here. So another scenario, like I said, equal lows. So longs are stacked in the same spot. It's not too many longs. Honestly, what we've been seeing is a lot of spot selling. So a lot of shorting, a lot of spot selling. Doesn't mean that we can't squeeze out some shorts before going lower. As you guys have seen multiple times now, we usually get some sort of rally that gets going around this time, develops more later into the afternoon, you know, forms some sort of rally and then just completely fail it, and what ends up leading to new lows. So we could see something like that start to develop today, at least in the next couple hours. As far as, you know, what's down here and the fluidity down here, it's kind of weak structure. I mean, you know, the tests here are nice, and you can just put a green box here, but if this doesn't hold, there's really not much left, besides like really cheeky sniper spots like 94.7 or the upper 94.6. That's pretty much it. And that's kind of a Hail Mary, because what that'll do is that'll stack liquidity at the lows. So even if we get a bounce here, which we might, you know, it's going to be stacking invalidations here, which if you look over here is the same invalidations as these guys. So it's just clustering invalidations. What we need to do right now is hold it here, pop the shorts, watch the failure, and then add on to hedges. That seems like the most logical approach right now. Also, these lines look kind of thick. Are they on 2? Oh, they are. I'm not going to go and change them all, but I forgot to switch that. Anyways, so let's see if we can get a rally going. The liquidity is rather shallow here, so definitely shallower than it was the last couple weeks. We had a return of pretty decent liquidity when we were sitting at around 100k. Like, the liquidity was really clean, it was really nice, but since then it's definitely gotten a lot more shallow, particularly on the bid side of the market, which obviously you don't want to see that if you're bullish. So we've got some new icebergs setting up shop. They're not as thick as the previous ones that we just went through, so I'm not too confident on them. And then we got one sitting, a pretty big one sitting at 90k. So we'll probably dip under this, tag the 89, maybe dive a little bit deeper, and then that's where the big battle's going to happen. I don't know if it's going to happen today. It depends on, you know, the cascade of selling that's coming in. Bitcoin's already down, you know, 3.5% today, so we'd have to actually see a pretty major drawdown on the day for that to occur. But it is possible. I mean, you know, the selling is heating up. People are getting scared. And if enough people get scared, then obviously you guys know what the result of that's going to be. What about a bounce from 95k? Yeah, like where we're at right now. Where we're at right now is pretty much the last hold before we go under 94. There's this one, but this is like a scalp. I don't think it's going to turn into a runner. Because, you know, like I said earlier, all the invalidations would be stacked in the same spot. It's kind of a target for liquidity to go down and grab in the future. But yeah, if we do make a new high here, there is an opportunity to add on to hedges, and then if you want to cover against those shorts, the next spot to hold would be there. So if we get a new high, the next area that we have to hold in terms of the structure would be here. The same logic, just following it all the way down. You can marry the locals here with the high time frame. I'll put a green box just so that nobody's confused. It's kind of a big green box though, so hit those longs. I made a good short-term bull gold entry. Oh yeah, gold worked out fucking beautifully, dude. Did you guys see what happened on gold? I'll come back to Bitcoin here in a second. Let's look at legacy. Look at this play on gold, dude. Just to the fucking T, man. Look at that. With this hand-drawn fucking line. I didn't even use the horizontal ray, but it knocked right on it. It's a lot of volatility though, so it needs to hold this. If gold doesn't hold now, we'll likely get a low lower than 39. If we get a low lower than 39, I have to see what kind of new structure forms on gold before I can, you know, change my opinion on it going lower. Stop holding gold with your lines, please. But yeah, gold was in a fragile spot, right? It needed to hold there and pump. If it didn't, then obviously it was going to get quite nasty, and you saw the dump that came in. So, as far as gold is concerned right now, like I said, it needs to hold this, or we're going to make a new low. And then after we make a new low, I don't know how low that can go or what kind of structure is going to be built down there. But once I see it, I can make a more informed decision on where it's going to go next. Remember, boys, one step at a time. Hold this. Go to a new all-time high. Don't hold this, go to a new low lower than 39. So we're at kind of another decision point for gold. And then silver was at its last hedge spot, right? So silver up here was at its last hedge spot. I commented that for a couple days now. But it's held the next area of structure just like gold. It just wasn't as clean. So, you know, you hold this. Next spot to look for is here. So both gold and silver are pretty critical spots currently. But the nice thing is, if silver does hold it, then we should see a really strong rally that comes out of it, right? Because you've got equal highs now. You've held both sides of the structure so far. If you continue to hold it on silver, then the moon arrow instead of the doom arrow. MicroStrategy? Yeah, dude, MicroStrategy is getting fucking torched on the market right now. Is Coinbase the next Herbalife? So multiple boys took the plays on gold and silver. Nice, boys. Yeah, we're not out of the woods on these plays by any means. We still need to see the S&P trail upwards for the day. And then hopefully the precious metals can follow as well. But yeah, it worked out nicely. As far as the dollar's concerned, told you guys, you know, we could get a nice little dump, but it's starting to turn around now. So it's got a little bit of fragile market structure here at the lows, but it is, you know, the Dixie, so it doesn't have to come to fruition. We'll likely see the dollar continue to rise. Not much has changed on there besides the little dump that came in. Urban, could you please tell what is the app website used for Bitcoin liquidity on the orders on the right? aggr.trade. Here, I'll type it in chat. I believe this is the right link. There you go. The VIX. We gotta talk about the VIX, boys. I did something pretty cheeky here. So now we actually have kind of fragile structure on the VIX on the top. We started to dump from the red box on yesterday's close. We went all the way back up to the previous zone today. Now it's good that it's failing it now, but we've left behind fragile on the top side, which is not good for the stock market. And obviously, if it's not good for the stock market, then it's not good for most assets. So it's good that it's going down, but you don't really want to leave that fragile market structure behind. Particularly when you look at the S&P, it's the same thing, right? You've got equal lows on the S&P, you've got equal highs on the VIX. So best case scenario is really strong rally. At this point, the S&P is kind of getting to a spot where I'm going to be a little bit more critical on its rallies. I need to see it actually be really strong at this point. So similar to how I was on Bitcoin these last couple of weeks, where anytime we did get a rally, I told you I'm going to be really stringent and conditional on those moves. Now we're kind of seeing that on the stock market. So that's pretty concerning, right? I mean, you've got equal lows on the stock market now, and you've had it multiple times. So that's pretty fucking spooky. It's fine if we can just maintain the strength, but that doesn't mean that we didn't leave behind fragile market structure. Again, it's pretty fucking concerning, but it doesn't have to be a problem that we face anytime soon, as long as we continue to see this strength come out. But it is, pretty much the whole way up, boys. There's fragile structure on the bottom side of the market. I don't like to call the tops on the S&P. I think it's likely going to continue to rally, but it is noteworthy to know that we're in another one of those situations where we really do need to see the strength and power come from the stock market to the top side. If not, then this thing could get pretty messy, particularly with the VIX now forming the structure it did. And we already had a tag up to 30, so I don't want to see another tag up to 30, and I certainly don't want to see a tag above 50. That's going to be really spooky. At which point do you recommend a shift into primary assets, and which ones? Like for long-term holding? It's hard to call long-term holding right now. I think probably the most solid one, if it does good today, is probably silver. Gold's pretty good too, but silver looks better. And then, depending on what Bitcoin does at 89K, Bitcoin looks pretty good. The Tesla play is working out, PJ. So Tesla went a bit deeper than expected, but it's back above the previous lows, which is a great sign. I want to see it get a little bit higher before I'm confident on it, but it's working out so far. The Tesla looks pretty good. Oil, still following the plan. Not much to update on oil. I know this chart's messy, but if you don't know, if you're new here, could see a rally come out of oil, but I'm still bearish in the long term. Okay, so that's the chart for oil. I don't exactly know if it's going to do all of these things, right? The first step is this one, and then we see what happens afterwards. You think we could be hitting 89K? Yeah, man. I don't know if we're going to hit it today. We might. It depends on what kind of action we get. But yeah, that's the plan. Is now that we're in the void, unless I see on Bitcoin, unless I see some major things happen in the void where some really strong structure forms and we're there for an extended period of time, and after that structure, I'm going to have to see a lot, right? To not be looking at 89K, or at least sub 89K a little bit. The Bitcoin, oh, this is called CoinGlass. This one's CoinGlass, this one's Tensor Charts. But yeah, so that's pretty much an update on Legacy. The 10 years kind of floating along. Structure still looks bad on the 10 years, so that's a good sign. We might see a little pop on the yields. I could definitely see us get a nice little pop on the yields, but I don't really see it having any, I don't see it really running that far, so probably, we could see a pop up to like, we could see a pop to like 4.25 on the 10 year, and then continue to move low. But the regular legacy stock market is just kind of 50-50 today. Some of the Mag 7's doing good, some's doing bad. Some of the lower market caps are doing good, some are doing bad. So it's kind of a mixed bag for a Friday, but at least, we're not dumping significantly, so that's the silver lining there. Let me see. Zcash update. Yeah, I'll talk about Zcash at some point. The New York Stock Exchange low-key saved us. Why do you say that, man? Alright, let me talk about Ethereum. Okay, so with where we're at on Ethereum, we've got equal lows, right? It is, like I said a little bit earlier, it is showing more strength than Bitcoin here. If all things line up nicely, and it's working out so far, I wasn't super confident that it was going to, but for some magical way, it's actually fucking working out nicely. We want to see Ethereum continue to show strength here because Ethereum's much closer to its structural test than Bitcoin is at this point. So we actually need to see ETH Bitcoin continue to do well if it's going to line up nicely. Basically, to put it simple, by the time Bitcoin hits 89K, we want Ethereum to be at 29. We don't want Ethereum to be under. A little bit under is okay, just like a little bit under 89 is fine, but we need to see a sharp recovery after. Hanging around underneath there, I mean, we've got room to breathe, right? It could get a bit sloppy. We have a lot of, basically the distance between this line and this line, there's a lot of room to breathe in this void, right? It doesn't have to be a clean test, but a clean test allows us to be a lot more confident in the longevity of the pump. You know, how high could it go? It could go, if I see the structure held as clean as it was in the previous two times, then it's a lot easier to be confident that Ethereum's not only going to go for another all-time high, but it's going to go for a big one. It might actually hold it, at least for the near-term future. But obviously, if Bitcoin's dumping very significantly, then you know, it's going to be really hard for Ethereum to be able to pump during those times. Because Ethereum's doing pretty good today. We just had another test of fluidity at the lows, so this is pretty much it for ETH Bitcoin. It's got to show strength now, but it's unfortunate because ETH against the dollar has equal lows. You've seen these equal lows and equal highs actually play out more often on Ethereum than we've seen on Bitcoin. But all that means is that, you know, the next rally we get, I'm not going to be too confident on Ethereum. We didn't really have a proper test here, so we could see a rejection from like 34.91. Right, while Bitcoin's slowly bleeding, and then you know, go for this and then start the rally up. So again, it's very important for Ethereum at this point to do well against Bitcoin where we're at currently. If it doesn't do well against Bitcoin, then the structural integrity of Ethereum that's been building for pretty much since the summer starts to come into question at a particularly bad time, since Bitcoin would be dumping in that instance. But yeah, man, we need to hold this today on Biddy right here, or we'll probably get a new low, and that means that we could, I mean, if things really get bloody on a Friday, then we could see the final battle take place today, but I don't know yet, right? It's impossible to know that. I don't like to time that kind of stuff. The good news is icebergs are stacking, so it could be, you know, a nice little pop the top. It's the best area to figure out, what's the best way to figure out the areas to trim your hedge? I mean, trimming your hedge right now isn't bad. Once we got under those equal lows, it's not terrible to start trimming a little bit. The big trims should start to happen at 89K, depending on what happens there. But there'll always be, you know, new opportunities to add on to shorts, right? So far, there's been 3 that I've seen that are pretty solid. There'll likely be more, right? Because the market ebbs and flows, so there'll be opportunities both to get more add-ons to short sells and also to take profits on shorts. But once you get under 98, I mean, you can start trimming the hedges a bit. You can start, you know, not necessarily looking for longs, but tips on percentage. That's a personal thing you have to decide for yourself. I mean, if we're we're at bulk TP for shorts or pretty fucking close to it. It depends on your preference. You can either take bulk now or you can look for bulk at 89 if you think that's going to be inevitable. The local bulk is already, you know, should have already been taken on the more near-term stuff, but you know, if you're aggregating a bunch of shorts together, a bunch of runners on your shorts, then you've almost got another full position going based off all those runners added up. Then you can start to trim that if you want. But, you know, until we see what happens at 89, unfortunately, you know, it's looking pretty bleak right now. The good news is we are creating a lot of voids. We're creating a lot of fragile structure on the top side. So that allows for a comeback to be pretty rapid and pretty quick. Did you guys see the tweet that Sailor made? Can somebody link the tweet that Sailor made? It's if you didn't see it, it's him on a lifeboat, and in the background there's a ship that's burning and sinking. And it's like, do you interpret that as that ship in the background that's burning and sinking? Do you interpret that as being Bitcoin, or do you interpret that as being the dollar? A lot of people on Twitter are saying that's Bitcoin in the background with the ship burning. But I think he probably meant the dollar, right? And he's on like the lifeboat, which is Bitcoin. And I've made that same analogy in the past of Bitcoin sort of being the lifeboat for all the debt that's happening with the US dollar. So who knows? Okay, thank you, Kazaki. Here we go. So this is the tweet. I think what he meant is the boat in the background is the U.S. dollar, and the life raft is Bitcoin. But a lot of people online are calling that Bitcoin in the back. Well, the reason why they're saying that too is because there's rumors that Sailor's selling. There's no confirmation that he's selling. There's some on-chain stuff that looks like it, but I don't think it's actually accurate. Actually, the Latvian sniper, I think, did a deep dive on it and confirmed that strategy is not selling. But certainly people that are holding MicroStrategy shares are selling, right? It's pretty deep into the void at this point. It's been getting absolutely slaughtered. It's trying to mount a little bit of a comeback today, but you know, I'm going to be stringent on it until I see. It's kind of similar to Bitcoin at this point. Unless I see some really strong rallies that can be maintained with good structure, then it's hard for me to say that it's just going to start rallying, right? So pretty much until the chart starts to prove otherwise, strategy is still sinking. It'll probably find a bottom at some point, right? Things don't just go to zero that quickly, but we'll keep an eye on that because I don't think Sailor's just going to jump ship on Bitcoin, but it is looking pretty bad, right? What's up, Traxian gang? What's up, World of Warcraft gang? The World of Warcraft gang that just joined, if you guys are bearish on Bitcoin, you get to see Bitcoin dumping even more. The gem of a copy pasta from Sailors. Bitcoin is a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth. Why does that seem like it's straight from ChatGPT? No, DGen Casino, that wasn't me. Oh yeah, go follow Trexing. I think the main culprit behind all of this crypto corruption is Andrew Ross Sorkin, the guy that lends credibility to every crypto person simply by interviewing them. I don't know. I don't keep up with that kind of stuff, man. I just use the price action. But yeah, I mean, certainly, I hinted at this in the last stream. In any aspect of finance, there's like the majority of people in that arena, whatever particular arena you want to point to inside finance. A lot of them are just fucking garbanzo beans. But it gives a bad name for the people that aren't. It is what it is. Yeah, still trading, Smiley. Just more of a turtle approach, right? Every once in a while I'll fight it out if I feel like it. It's a pretty good hold on Biddy so far. Let's see if we can pop the top, squeeze some more shorts, and then look for add-ons to our own shorts. What point did Bitcoin start getting covered by CNBC? I think in 2017, or maybe 2016. Well, no, there was a time before that, but I mean like before it really started to get a lot of attention. I think there's been multiple times actually prior to that, but before Bitcoin really got attention from the average person, I think was on the 2017 rally. And then obviously the COVID rally, it got a lot of attention there too. But there's not that much attention in this time around, which means that we haven't hit the moon yet, boys. But yeah, Traxy, like I was saying on ETH, it's got equal lows, so that looks really bad. It is doing better than Biddy. As far as ETH is concerned, it needs to do well against Bitcoin right now, and it probably needs to do well for the next couple days, at least over the weekend and turn next week. Because 2900 is pretty much the last hold for ETH on the structure, and 89 is the last hold on the structure for Bitcoin. So best case scenario for the bulls is that both of those things line up, particularly for Ethereum more so than Bitcoin. But if both of them line up, then there's a chance of a recovery. If not, then Ethereum looks pretty fucked here. What's up, Tomothy? I thought the McRib was back. Where pump? Is the McRib the bottom indicator? Anytime the McRib comes back, the market's pumped. Is that what it is? ETH outperforming Bitcoin. Yeah, I hinted at that yesterday, Tom. It kind of needs to right now. Because remember how I was saying 29 on ETH lining up with 89 on Bitcoin? The only way that was going to happen is if ETH outperformed Bitcoin. So that's still kind of coming true right now. I'm a little bit less confident, obviously, with the equal lows that Ethereum's formed, but basically ETH's got to prove a lot here while Bitcoin's dumping, which is not typical of ETH to do. I mean, there were glimpses of that in the late summertime, right? So maybe we see round two of that, but ETH really needs that help right now. Got a weird feeling that alt season it could just be ETH getting hurt less than Bitcoin. Maybe, man. But usually, okay, so the difference that I see here, and I believe I've talked about this on stream before, obviously a lot of the Bitcoin rally that we've seen so far has had a decent amount of influence from like institutional, right? Institutional has pretty much absorbed like 2 million coins over the last couple years. Starting from 2020, but really like the ETFs and stuff and Michael Saylor have absorbed a lot of the supply. So like typically what you see, right, in a crypto cycle is, Bitcoin pumps first, and it pumps pretty hard. Then the rotation out of Bitcoin into Ethereum. Then the rotation out of Ethereum into the other altcoins. The difference this time around, I think, and I'm almost certain I've talked about this before, but the difference this time is like, most institutional guys, particularly like Saylor, right? He's not gonna, if he's gonna sell Bitcoin, he's not gonna rotate into Ethereum, I don't think. That'd be pretty fucking crazy if he did, but I don't think that's gonna be the case. Same thing with the people who are buying the ETFs. So I think we'll probably get some rallies on the alts, but even if we do, remember that that's usually indicative of the end of the cycle. And it usually does come in the latter parts of Q4 or the early parts of Q1. But we'll have to see how that plays out. I mean, we'll take it one step at a time and see. But it is interesting, right, that the alts are actually doing rather good, again, against Bitcoin's weakness. Not necessarily good, but I mean, here's what's weird, right? Look at your watch list right now. Bitcoin's down 3.5%. Why are the alts not down 10%? In fact, I don't think there's no alts on my watch list that are down more than Bitcoin today. How fucking abnormal is that? I mean, we've seen that abnormality a couple times so far, but not to this extreme. Right? This is the most extreme I think I've seen it. The situation that we're in right now is probably the weirdest we've seen in years in terms of how the altcoins are behaving. I don't want to call alt season or anything like that, but it's noteworthy because, I mean, think about it, guys. When's the last time you saw Bitcoin down 3.5% and alts are not fucking down? Some of them are up, right? Ethereum is only down 1%. Litecoin's up. And this would be a brutal fucking alt season. If all alt season was just the alts not dumping as bad as Bitcoin, that'd be crazy. What do you think that indicates? Maybe some sort of rotation. There's still people that are retail individuals who will rotate, right? I think actually that's probably the majority still. It's just a little bit less probably this time around. Because still the majority of the Bitcoins are in the hands of the individuals, not in the hands of Michael Saylor or any other institution. That would be really sad, Tomothy, if that was the case, though. Imagine we don't get an alt season for another year until Bitcoin enters its next 4-year cycle. I'm gonna go grab another cup of coffee. I'll be right back. Griffic, you come in here. I think you're new, right? The last time, 2 times you came in here, you're just fudding the chat. There's plenty of people that FUD the chat in here, but it's just they usually have been around for a longer period of time before they start the FUD. I heard Satoshi's dog is dead. What the fuck are you guys saying? No, you don't have to leave, Grippic. I mean, you can if you want. It's just funny. I'm not trying to pick on you. It's just you come in here with a FUD. All right, let's see. Can Biddy hold this? If Biddy doesn't hold this here and now, then we're gonna see some more fireworks come in, boys. Alrighty. So yeah, as far as the Mag 7's concerned, I can give you guys a quick update on that. On the stonks. Apple's still doing very strong. Amazon looks a little bit weaker, but it was a nice test there. Pretty much filled the gap. Google still doing well. Actually, Google just confirmed the bear div, similar to how Tesla did it, but Google looks even stronger. Nvidia has got a lot of equal lows. Both Nvidia and Palantir look like they want to go for a deep sea dive, which would be crazy because they're kind of holding up the markets, right? Nvidia's got pretty shaky structure here. The reason why I say that is because the equal lows, and you've got multiple instances of that. The same thing with Palantir as well. So, I mean, Google looks good, Tesla looks good, Amazon and Apple look good, but Nvidia doesn't, and Palantir doesn't. But who knows? FOMO rallies can go crazy. Do you use volume profiles for entries? No. Biddy's struggling. Come on, Biddy. You gotta hold the green box or it's doom time. No, volume profiles are not great. I tried to use them for a while and get them to work, but point of control is pretty useless. Dude, look, fucking S&P's dumping. Right when Bitcoin's in a fragile spot. Uh-oh. Not round two, sir. Please, I'm tired, boss. Yeah, but, like, you're talking about point of control, right? When you talk about volume profiles. Nah, intraday point of control is no good, because it's too narrowed in. It's like trying to look at 24 hours worth of data and then coming to a conclusion that you know where the price is going to go next. Whereas you could look at, you know, months worth of data and come up with that same better conclusion. And then if you wanted to do like the type of volume profile where you sort of pick and choose what data is included and what's not included, that's arbitrary. So you could try and use the volume profiles that try and include months of data, but like how many months are you including versus how many months is somebody else including, which will change where the point of control is. Most volume tools are pretty garbanzo beans for the most part. Volume in itself is not the best way to, like, if you're only using volume, it's not, you know, I mean, S-Case has done wonderful with it, but usually if you're trying to take like trades every single day, most volume tools aren't that good. But looking at volume is, you can infer certain things. It's just not going to tell you where the entries and exits are. TWAP, people will point towards TWAP, but that's old school meta. I think TWAP's been popular for a long time, but it's no longer as good in the market anymore. Usually if something's worked for a really long time, from an indicator perspective, it'll either go on the back burner, meaning it won't be viable for, god damn, Bitcoin, you can't even hold the green box. It won't be viable for a long time until it sort of rotates back into the meta, or it'll have gone obsolete. Rarely do things go obsolete that have worked for an extended period of time. They just, you know, like I said, go to the back burner until the market sort of changes back to that sort of meta. Like relative strength divergences. There was a time where like a 5-minute or 15-minute relative strength divergence would just nail every single time. Now it's gone to the point where it's only like 4 hours in daily, sometimes a 1 hour, right? It depends on how much action we get and how tight and how good it looks, but yeah. Oh yeah, Zcash. Yeah, Zcash is sort of decoupled, it's still decoupled from the rest of the pack, which is kind of a good sign for the rest of the alts to show that it is possible. So yeah, nice little rally that came out. It did some cheeky stuff though, as you guys saw on the price action. It came back down to the area of fluidity, and at least it swept it, so that's not too bad. The structure looks pretty good. We could see a dump here if we see that divergence form on the hourly. But the next area is to watch since it's held, so it's just one step at a time, right? Mark that. Mark that. would be here, or if you're more aggressive, would be here. So if Zcash dumps, I mean, you really don't want to go below these lows, so it's kind of in a tricky spot right now, honestly. Yeah, it's hard for me to give advice on Zcash, but I mean, the structure looks good, the volume looks good. You know, it's pumping while Bitcoin's dumping, which is a good sign. One that's coming closer to fruition is near. Depends on how aggressive you want to be. But let me show it to you. So this held beautifully, right? Spike in volume, beautiful. And then you have sort of the next one, which is kind of hard to see here. Bitcoin, don't die. What are you doing? So you have this. You have this, which you can kind of put a box there. You have that. And then if you can get a new high, then you have that. So if you're aggressive, the spot that we're at right now would technically be the area to buy, but if you're more passive, then you'd marry the local together here. So we're at the more aggressive green box right now for near, and the more passive, if you think it's going to go lower, which with Bitcoin dumping it certainly could, then the discount near would be around like 2 to 2.1. Traxy, look how many fucking equal lows are on near, dude. Look at how many fucking equal highs are on near. And you could even pair these ones in there too. Swept the lows, right? Had equal lows, swept them. Didn't fall off a cliff, saw a spike in volume. Then the retest of it, saw another spike in volume, even bigger one. And good fluidity. I mean, pretty much the highest volume we've seen on near, which is a really good sign. So aggressive would be now. Passive would be if they give us this for add-ons. And then going to pop the top. How much do you think banks charge Sailor for loans? I have no idea, dude. I didn't look into that. I'm gonna play a little bit more upbeat music. Biddy's pranking us. Yeah. I'm gonna delete the green box because it pretty much failed. But if you check weekly on near, is it not bad coming to that low of the candle? I don't really use the weekly stuff too much. I know it's pretty popular amongst a lot of people, but I'm not a huge fan of it. Whipsaw PA? Yeah, but when it does test like the upper bounds or the bottom, the lower bounds, that's where I'm sort of looking, right? You had all the stop losses in the same spot on near. You flushed out the lows, right? And then you had the retest of it, which is fairly clean. The spike in volume, which is a good sign. And now you want to see structure hold again. Structure holds again, then we can certainly go and pop the top. And a void was created as well on the way down. So you see how we went straight down? The time to pay attention if you're long on this already or you have spot buys is what happens above 350. If you see something like this, it's really sad. But if it holds it, then it can go a lot higher. Right, because you have equal highs up here as well. This stuff's already done. The next one kind of was front running here and here. So red box would be here. It's kind of a big red box, but that's where it would be. So from like, if it does give the cheeky entry, it'd be from like 2 to 2.1 all the way up to 6.5 to 7.2. Potentially more too if we are at the end of the cycle and alts do find a rally. But yeah, man, near looks good. One of the few alts that not only had a good test of fluidity, but also had a spike in volume in both instances. I mean, this was enough on the volume. This was just fucking bonus points. Like, to answer your question, Rock and Roll, normally I wouldn't do a box, right? Because it's this one and this one. But, you know, sometimes people ask, okay, which one's more important, this one or this one? Usually the one that's further away. But I'll just put a box there because people will be confused. So the further away one is usually the better one, but it's less likely, you know, maybe it won't get tagged or whatnot. Enemy with like 15 Ys. What's up? Welcome, welcome. You're new here? Interesting name. Well, enemy, you might see another big dump that comes in on Bitcoin for your first time here. Something tells me that might be your Smurf account or something, though. Team sentiment about Disney from retail is that they're pissed off and fed up with the stock. You're still trading Disney? Why do you like Disney so much, Glam? Did you get a really nice trade on it and then you just want to keep... Let's see, what's Disney doing? Ooh. Wow. You've been shorting since 118? Nice, man. Yeah, so this is pretty straightforward on Disney. You gotta wait for the squeeze on either side. Doesn't really matter which one happens first, right? If you go low, and you basically if you see this, and you don't see that, then opportunity to long it. If you see this, and you don't see that, then opportunity to short it. It's the enemy of the bulls. Yeah, I mean, this kind of trading is pretty straightforward, right? You don't see these charts all the time where it's literally just, you know, buy high, sell low type shit. Looks like a 4x chart. It couldn't be more simple, right? Normally the charts aren't this straightforward, but I mean, if every chart was like this, it'd be pretty easy, right? You just have to wait for it to enter the green box, buy it, wait for it to enter the red box, sell it. But what this does is it creates a lot of invalidations in the same spot, so it's going to be building a lot of volatility. Usually if it's neutral structure like this, I point towards trend. So Disney is in a downtrend before the structure was created. So that would lead towards this arrow here being more likely than this one. Which will fucking dust Disney though. To be fair, Disney is, you know, heavily supported by credit card users and whatnot, so makes sense. Leverage getting flushed. Have you been in this chat before under a different name? I'm gonna put a spooky, what's a spooky emote we can put here, boys? There we go. You were here under the friend tag before. And then, there we go. Below that is Scaries. I'm new here, I'm rarely on Twitch. Yeah, some of the viewers that come by here, this is like the only Twitch channel they watch. Because Twitch is mainly for gaming, right? I'm just gonna put the text below here equals doom with 3 O's. Feel inspired by your name enemy to add extra vowels to the word. XRP. Oh, we can go through alts today, actually. I haven't gone through alts in a while. It is a Friday. Dogecoin volume looks pretty bad. You know, you guys remember the near chart that I just showed you, right? Look at the relative volume. So let's look at them side by side. They both had the flash crash in early October, right? Here's the volume on Doge, the relative volume. Okay. Here's it on near. So that's the first difference. But we'll have a better answer on Doge depending on what happens at this area. So from like 13 to 14. If it holds it, green box, right? It looks pretty good. But you know, a spike in volume would be lovely to go with that. But pretty much hands off. You know, in this kind of circumstance, you actually could see a daily div build right at the top of the box. So get an insignificant lower low with daily divergence because you have some room to breathe on RSI. So you could see something like this. That looks pretty good. That looks like it could go for a nice little run. But until then, maybe the probabilities of it don't look too favorable on Doge where it's at currently. Solana, I mean, it needs to hold right here and now, or it's as you guys can see, I mean, it's got the daily bull div sort of forming. There is a lot of data in between it, so it's a little bit questionable of a daily bull div. But like a long on Solana, I guess makes some sense here. It's just the structure looks really shit. So if there was a spot to long Solana, I guess it would be right now, or at 110. But after that, it's pretty much bear market for Solana. The 12-hour on XRP, there's a bear div. That's an interesting metric to use. Why do you look for the 12-hour? That seems like you might be pick and choosing. XRP is interesting. The volume's not that good. Kind of, this local structure needs to hold here, and it already had the local test of it. I have the high time frame test of it, so the optimistic scenario for XRP would actually be holding like 2.17. Let me get more precise, because there's probably XRP boys in the chat who are looking for exact numbers. Magnetool, where'd you go? There you go. So 2.19, okay. Holding this on XRP, or getting a low lower than this low, which would coincide with like more of this local stuff, or higher time frame stuff down here. So opportunity here potentially, and then this is the last opportunity before XRP falls off a cliff. I told you guys up here, unfortunately, XRP didn't look good. XRP really needed a lot of help from the other market sediments like Bitcoin and ETH. So if you guys remember, I was bearish on XRP here. Not like entirely bearish because I thought maybe Bitcoin could save it, but that wasn't really the result of it. Kind of fell off a cliff. But this is a good learning, a good teaching example of how to read structure, right? XRP. This kind of structure I've seen play out in the stonk market, in multiple different markets. So this in particular is actually pretty important regardless of what asset class you trade. It's more important for asset classes that have big leverage markets, but it can be seen in a variety of different things. So, I mean, it's pretty straightforward, right? All the lows are really close together. All the highs relative to that are more spread out. So when comparing both the highs and the lows, right? The lows look a lot more closer together than the highs do. As simple as that. What does that mean? It means that people that are betting the market's going to go up are all positioned in the same spot in terms of where they're going to give up on that idea. The people that are betting the market's going to go down are positioned in different spots. They're less clustered. So some of them might give up here. Some of them might give up here or here. Usually that means that it's going to dump. It's the same thing I use for Tesla. It's the same thing I use for oil to call that. So like when I called the oil dump here, I used the exact same logic. You see this? All the equal lows, the lower highs, and then dump on oil. And then Tesla up here, it wasn't as obvious, right? But you have all these equal lows, lower highs on Tesla, and then dump. So there's three different asset classes. I called it before it happened, and now I'm showing it to you right now. You know, common stock, commodity, and then also crypto. So it's sort of an important structure to familiarize yourself with it. When I was starting out in Bitcoin, I really ignored this type of structure, and I got fucked. If you guys remember, this exact same structure happened in 2018 before we went down to 3K on Bitcoin. But ever since then, I've never ignored it again because it was a very painful time. So yeah, anytime you see this sort of, and the same thing is applicable on the other side. It's a little bit less consistent on the other side, but you know, if you see all the highs in the same spot clustered together, and then you see the lows sort of formed. It's also what I used to flip a little bit more bullish on gold before the pump happened. Here, the same logic. It's a bit hard. Sometimes it's harder to see, but if you familiarize yourself with it, it'll become easier to see. So on like gold, you know, all these equal highs, particularly when this one was formed, and then you have like the lows that are more spread out, right? Yeah, you can, Glenn. You can inverse the other way as well. Yep. The inverse isn't as consistent, but it's still pretty fucking good. Compared to other things you could use on the market, it's still pretty fucking good. But yeah, this one simple thing, you can call it a chart pattern, whatever you want to call it. is really effective. Because it just shows you where, like, you know, where the crowd psychology at. And really all it is people pressing red and green buttons. So at what point do the people that have pressed the green button feel the pain? At what point do people that have pressed the red button feel the pain? How do you familiarize yourself with these structures? Repetition. Just keep looking at different charts and trying to find it. Now, a lot of this stuff is now in retrospect, but I did talk about it before it happened. But there's nothing wrong with looking at a chart in retrospect if you're new. Right? I mean, look at the Bitcoin structure. This one's less obvious, but these equal lows. This one's less obvious, hard to see. But you had everybody clustered in the same spot, and then invalidations for shorts were more spread out. And then bang, dump. So if I see like the inverse of this form in the void, those are the kind of structures I hint at in terms of, you know, if I see things change where we're at in the void, then I can change my opinion. Like if I saw the inverse of that happen here on a higher time frame, then I can be more confident in it. But until I see that, I can't. Wouldn't backtesting? Yeah, I mean, just look through charts, and you know, there isn't a lot of when it comes to actually placing trades, there's not a lot of validity when it comes to looking at, you know, oh, I would have done this, I could have done this, or whatever. But if you're trying to get better at reading structures, and a lot of these structures, what happens is, in the low time frame, these sort of battles happen, right? And depending on where they happen and how they play out, they can end up forming what the bigger picture. So a bunch of little battles on the low time frame can end up forming the bigger picture. And that really tells the story of, okay, where's the bigger move going to happen? Another thing you can look at too is like taking out topside liquidity versus bottom. This one's a bit harder to familiarize yourself with it, but the reason, a lot of these things, it's all relative, right? It's all based off the relative movements in the past. So it's a bit harder to quantify these kind of things. I'm sure there's a model you could build around it, but it gives me a headache even thinking about how that would be done. But the next one you could do is like, I think it's better if I show it to you in the chart. Let me show you in a diagram first, and I'll show you in the chart. Ooh, look at that go through. Big dump just came in, boys. The flood continues. Hold on. We gotta watch Bitcoin here for a second. Because below here is spoopies. Okay, nice little buyback. We dipped into the iceberg again. We just chunked it. Okay, they're setting up a defense here, but it's one of those situations where it's not that good. Like, this is what we're watching is like one of those 1 minute battles that takes place where the bulls might win it, but it creates a fragile structure on the big time frame. A lot of the time, like I said a bunch of times in previous streams, it's better to just rip the band-aid off. You know, pussyfooting in the hole like this, as my football coach would say from way back when, is not good. Okay, so the structure, the other one you can look at is let me see, how would I do this? So say you have like a downward move, right? It's pretty sharp relative to, it's all relative to. So you make a low, you make a high, you make a higher low, you make a higher high. But what do you notice about this kind of stuff? What you should notice is that the highs that we've made, yes, they are higher highs, but why weren't they more? Like, why couldn't this next higher high be like this? If it's very insignificant like that, and the higher lows are very close together, that shows that it's usually bearish. And the other reason why it's bearish is because when you look at like the microstructure here, you've taken out the short sellers, but you haven't taken out the longs. And you've put the longs all in the relative same spot. There's plenty of examples of this in particular happening on Bitcoin, right? What we saw here on Biddy. You know, you're making higher lows, you're making barely higher highs, so you're taking out the topside structure, or the topside short sellers, but you're not taking out the longs. And why, when we went for this high here, why wasn't it more? Why didn't we take out those equal highs? It was technically a higher high, but pretty much an equal high. The old flag. Yeah, I don't think this this one might be actually considered a flag. I don't know. I don't try and put names to the patterns or anything. It's just about seeing like the relative movements. Anytime you make a new high, anytime you make a new low, you need to forget about what your bias is and just evaluate it objectively. Like, was that significant and why wasn't it significant? And what is significant? Significance all based off the relative price in the past. Like another example of this is this one here, right? You've got like higher lows forming on biddy and barely higher highs and then dump. The inverse is also true. I mean, look, you got barely lower lows, barely lower highs, and then pump. So it's this, same thing, but it's inverted. Lower highs, lower lows, instead of higher highs and higher lows. Bourbon, I want altcoin season for my dog coins. Yeah, the dog with hat is gonna pump, dude, don't worry. He's wearing a hat, it's hilarious. And it happens again and again. I mean, this instance here is a little bit different, but you know, you've got lower lows again, lower highs, but why weren't the lows more significant? And why are all the highs in the same spot? And then pump. Now, I'm kind of holding your hand and showing you this, but you need to be able to do it on your own. And honestly, it all comes down to a lot of time understanding, like looking at charts so you can understand the relative. No, it's all based off what happened in the past to some degree. Sometimes it's not going to be that straightforward though. Sometimes you'll get really cheeky stuff that happens. It's just the more stuff that you've familiarized yourself with, the easier it is to identify what's going on, what kind of thing are you looking at. I just happen to have a fuck ton of time doing this. So even when they throw cheeky stuff at me in the chart, I can still get a general idea. Sometimes I'll be less confident, right? But I can still get an idea regardless of what they throw at me. Buy, 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 hodl, hodl, hodl. And then, like, once you have a general idea of where it's going to go next, it doesn't mean that you just... Like, let's say that you're looking at this one, for instance, right? It doesn't mean that you can just short it here, because what could happen is it could bounce back up, do another cheeky thing like that, and do the same thing again, and keep doing that. So the way you do it is you wait for this to happen, and then you look to enter. Because if you do it down here, right, you short down here, then you get invalidated before it potentially comes to fruition. It's the same thing on low time frame, but less likely. Yeah. That's pretty much applicable to any way of analyzing the market. Low time frame is always going to have less probabilistic edge when it comes to using certain things. But once you're informed on what the high time frame is and where it's likely to go on the high time frame, then you can maneuver yourself in the lower time frame way better. That's really important because most people, what they do is they hop on like a 1 minute chart like this, regardless of the financial instrument, and they'll be like, oh look, there's a fair value gap, I'm going to short it there or something like that, and then it pumps straight through and they get fucked. Or there's a fair value gap on the bottom on the 1 minute, that looks like it's going to pump. But they're really just guessing, because if they're not informed about what's more likely to happen on the high time frame, then they need other market participants to pretty much sell lower than them or buy higher than them for it to ever come to fruition. So after you've done analysis on the high time frame and you've done it properly, not just fucking, you know, oh, there's a lower high, there's a higher low, or whatever, then you can have a decent idea. But it you know, like lower high, higher low, sure, but what is actually going to happen is two different things. You're trying to trade BNB. Let's see, what is BNB doing? Where's my BNB chart? Here it is. Ooh, devastation. Yeah, so you got a bunch of equal lows here. You do have Binance supporting it though. So like this looks bearish, right? But the question is, do you short it right where it's at? Why does it look bearish? Well, it's the same thing, right? Where's all the clustered invalidations for people that are longing it? Where are the clustered invalidations for people that are shorting it? Okay, so structurally looks bearish. But does that mean you short it right here? Well, if you look at this chart, it's technically the relative low. You're sitting at the lows. So what could happen is you get popped, right? And then something like this happens, and then it finally comes to fruition. Like, you knew it was going to dump eventually, right? But knowing it's going to dump eventually does not mean that you can make money from it. So it's about knowing where it's likely to go next, and then waiting for an entry that makes sense, founded in risk-reward principles. If it doesn't give you the entry, then it's okay. You didn't lose any money. So, like, how could you play this one, for instance? Well, let's check the fluidity on the other side of the chart. We haven't really had proper tests anywhere here. I mean, this one's pretty good. So the next one would be here. So you wait for people that short sold here to get squeezed. You wait for the exuberance to come back to the market, people saying, oh, BNB is going back up. And then you look for this. Because this one is technically done. It wasn't that clean, but technically done. And then ideally, if you want even higher probability that the trade will work out, then you want to see some kind of like, divergence on the daily or the 4 hour here. Or some weak structure here on the lower time frame. So like, yeah, you think it's going to dump, right? And you're likely right about that. But you have to wait for it to come up. You have to wait for the dumbest person to go long until you go short. Only then do you have a good trade. Now, if it does dump, then what do we look for? Well, how big was the dump? How significant was that dump? If it's insignificant based off the relative action, and there's been plenty, as you can see, it's fucking devastation. Like, if we see this, then there's an opportunity to long it. Because what should happen, if everybody's selling at the same time, we should see that, right? I mean, we already saw it a couple times. So if we see that, the doom arrow, then there's no opportunity. But if we see this, then maybe there's an opportunity. There's more at play, right? You have to check market sentiment from bigger asset classes. Like, okay, what's Bitcoin looking like? And then what's the S&P looking like? If Bitcoin and the S&P are looking bullish, and we've just done this on BNB, then you wait for that. You wait for this sentiment to push against, so you get better risk reward. If you're willing to trade both sides of the chart, then you being right about it dumping isn't the end of the world, because it could provide an opportunity even if you missed it. But, what we've seen in the shift of the meta is the equal lows holding a lot of the time. And particularly with BNB being Binance's, coin, it's got a lot of backing behind it. So sure, it could definitely pop up here before it dumps. Pop up back to 1,100, or in this case, it's 1,088. I'm not drawing the lines using the magnet tool because I'm streaming and we'll be here all day if I do that for every single line. But if you're interested in it, then do it on your own chart and you can actually use the magnet tool and be more precise. Like if I was doing this and looking to trade it, I would be using the magnet tool to get the exact levels. But I'd show you the general area so you know. These kind of concepts are really important for trading. Really, really important. Because I think if you don't understand this kind of stuff, you're kind of just blindly gambling. Does candle color matter when looking at wicks? Kinda. Not really. You could have all the candles be the same color and I would still look at it the same way. Honestly, it's probably not a bad idea that you do that, particularly if you're new, because like having green and red, like let's say you're super bearish, right? And all you can see is the market going down. You might just completely ignore the color green, for instance, and not even be able to see the color green. Well, I mean, you can see it, but your blinders are on, right? So you're not really paying attention to it. So if you're just starting out, I mean, it's not bad to just put all the candles the same color. The reason why I still have them green and red is because it doesn't affect me that much anymore. Like, whether it's green or whether it's red doesn't really change my opinion on it too much. Like, pretty much not at all. But yeah, man, try that out. Another thing you could do, and I've said this a million times in the past, but look at a financial instrument that you truly don't care about. Because everybody in here cares where Bitcoin's going to go next to some degree, whether you want to admit it or not. Even if you're completely hands off of Bitcoin, right? Or you don't have any shorts open, you don't own any spot, you still probably have some confirmation bias in the back of your mind that you want Bitcoin to go down or something, right? So all you're going to see is things that support that metric. One of the worst things you can do is like, say that you're over allocated on one side of the market, like you really want it to go up or something. one of the big mistakes that I see, and because I've done it myself, is trying to find little metrics that support your idea. So like ignoring what you would classically look at, like let's say like a 4-hour candle. Like somebody in here, enemy, I don't mean to pick on you, I'm just using it as an example. But like going to like a random like 12-hour and looking for like a 12-hour sort of confirmation, where normally you wouldn't look at the 12-hour time frame, but you're looking at it to sort of find something that backs your idea, that confirms your bias. Now, enemy might use the 12-hour all the time, so I'm just using this as an example. I'm not trying to pick on you. But if you find yourself like using different ways to analyze something that you haven't in the past, you're already trying to force something there. You're already trying to force what you want to happen onto the market. The market really doesn't give a fuck about what you want. You have to listen to the chart, not tell the chart. You have to see what it actually is, not what you want to see. Woke up to hella V-Bucks after I shorted Bitcoin. Man's is V-Buck rich. Yeah, inverting the chart helps too, right? So like, let's say that you're, whatever bias you have on Binance Coin, right? If you invert it, does that change it at all? Do you see it any different now? Most people in here probably don't give a fuck about Binance Coin that much. So maybe Bitcoin's a better example. So let's do it like this, right? Let's pull up a high time frame Bitcoin chart. Okay. And now, so you already have a bias, right? You already think it's going to go a certain place. If I do this, does it change it? And not completely change it, but do you see it in a little bit different of a light? So what do I see here? Well, we just popped the top. We just popped the top. So we see a reversal here. That's a failure into pump. Or in this case, technically it would be dump. But if we don't, then we keep going until we reach the next point of fluidity, which is here. And that would be 89K. So we keep dumping, then we look for this. If this doesn't hold, then we go for the equal lows down here, and then we dump even further. And then if we do get the pump, then we look at the other side. This has not been properly tested, so 112, sure. There's better stuff in this range, like you married the local here, so it's technically 112 to like 113. And maybe a little bit deeper into there, like that. And now if these certain high time frame things start to play out, now you can go to the 1 minute and have a good idea of where the directional bias should be. If you're just hopping onto the 1 minute and you're like, oh, that's a lot of green candles, must be likely to go up because we just hit the fair value gap or whatever you're using, you're gonna be flying blind, man. And you're really, at that point, you're just gambling. The thing about trading too is, you know, if I'm being generous, 5% of the chat is going to have long-term success in trading. So 95 to 5, those odds are worse than fucking Baccarat or Blackjack. Better off just playing Blackjack than just hopping onto a 1 minute chart and opening a trade because you want the stimulus of seeing your unrealized P&L go up and down. You know, those exchanges put the unrealized P&L right in your face, and they make it colored, right? So you're just getting that dopamine hit of it going up and down. Really, the only time you should be on the exchange is to place orders. After that, it just needs to play out. And to use position sizing for risk management. That's pretty much it. If you're just staring at the unrealized P&L, you're doing yourself a disservice because you're training your brain to just thinking for dopamine from it. You know, in the markets, you have the most competitive place in the world because there's the most amount of money to be made and lost. It doesn't get more competitive than the fucking financial markets. So you're going against killers, right? You're going against the best. If you think that you can just hop on a 1 minute chart and enter a trade while you're going against the best, you're going to have a rough time. Unless you're a fucking monster that's really good at fucking cutting losses quick and letting winners run and doing that very quickly, then it is possible. Like there's people in the Discord that do that, but it's really hard. And when you're starting off it's not something I would recommend. Now, again, once you have the directional bias, once you have a good idea of where it's going on the high time frame, then you can go to the lower time frame. And if you're going to be playing on the low time frame, you have to understand what I'm calling it as implied risk reward. I don't know if there's different terminology out there, but I sort of took that term from poker. Implied risk reward means like, you know, say you're on the 1 minute, right? Theoretically, this is not like a trade I would recommend, but just for example, right? Let's say like, oh, you longed it here or something, right? Stop loss down here, and you've hit your profit target of 3. Well, now let's imagine a world where the high time frame is bullish. So the high time frame looks like it's going to pump a lot more. Well, while you're narrowed in here, yes, you've locked it in 3 risk reward, but the implied risk reward could be a lot higher. If we're on the 1 minute and the high time frame is bullish, then the implied risk reward could be all the way up here or even higher. So you think you're going for 3 risk reward, but you're really going for a lot more. And if you're going for this high of risk reward, how often do you think that trade's going to work out? If you're going for a 30 risk reward trade, right? Regardless of strategy, how often do you think that wins? So you think you're going for 3, you think you're being reasonable, but then you keep losing. You keep getting stopped out, stopped out, stopped out. Because in reality, you're actually aiming for a lot more. And if you're not taking advantage of the runners, if you're not taking advantage of that implied risk reward, then you're cutting your winner too soon. And if you're cutting your winner too soon, it means that you're not cutting your loss quick enough. But I have a tight stop loss, sir. What do you mean I'm not cutting my loss fast enough? So we have to get rid of this idea of like binary trading too. You know, full in, full out type shit. Like you're looking at your unrealized P&L when you have a profitable trade and you're like, I'm going to close all that. That's a lot of money. I'm going to lock all that in right now. Well, you've actually made a mistake when you do that. It doesn't seem like a mistake in that instance because nobody ever went broke taking profit, right? Well, that's flawed logic. The reason why that's flawed logic is because not every trade that you enter is going to go into profit. If you take enough trades, you're going to have losses. In fact, if you're not paying attention to all the shit I'm talking about, you're going to have probably a lot of fucking losses. How do I know that? Because I've walked the fucking path, man. I've done it myself. I felt the pain too. These like little things, they add up in trading. If you don't have a good idea of what the fuck's going on, then you're just dumb liquidity. Which, you know, well, there's like 130 people in here. It's not going to really change. It shouldn't change the market that much unless everybody in here is just a fucking mega whale, but. So, like, the short sells I talked about last week, right? And earlier this week is when I talked about them. So, like, yes, it's good to trim the hedges, right? It's good to take profit, but you don't want to fully close the position. So, like, let's say you took this one that I talked about. I think the Europeans were sleeping, so probably most of them didn't take that one. But let's say you took this one that I talked about here, right? You can take profits. You can take profits here. Now, why would you fully close it if the structure broke here on the bull side? It broke right there. And you have equal lows. So you have equal lows, right? And now you've taken, okay, 3 to 4 risk reward. Good job. The trade worked out. But what you've left on the table is potentially all this, and maybe even all the way down to 89K. And here's the thing, right? If you want to get a nice runner on the low time frame, you might get tagged out a couple times. The first trade that you take, let's say that you've got a good directional bias, right? So in this case, you look to short it. You might lose the first second trade that you try and take on the short. But the third one then turns into a monster and pays for all of it. Until you've hit your daily drawdown, you can keep trying, but you need to make sure that you have good risk management so that you have the room to breathe to keep trying. If you don't have the room to breathe to keep trying, then you gotta get fucking lucky. And if you're already trying to rely solely on luck, you know, it might work the first couple times, but eventually the market's gonna fucking take it from you. You're gonna give it back to the market. When your trade is up 50 million, is it okay to walk away? I mean, if that's a pretty good trade, man. I don't know what kind of question is that, chemist, but you probably nailed a fucking really good trade if your trade's up that much. Depends on your drawdown, Mal. So let's say you're risking like 0.5 per day, and your daily drawdown is maybe 2%. Then on the fourth stab, you just gotta stop for the day. Because if you don't, what are you gonna do? More likely than not, you're gonna look at this on your account, and it's not going to sit well with you. So now you're going to up it to 1 to 2% risk to try and get that back. And then what happens if this doesn't work out? Then you're going to martingale, and you're going to go up, and now you're going to do 10%. You don't just crawl up and double every time when this kind of emotions hit. You go to this. And then if that doesn't work, you could blow up your account in a day. Particularly if you're new. Or if you're not in the right headspace. If you're in the wrong headspace, it's a slippery slope. Think about like a poker player, right? If a poker player is having a bad day, what do they normally do? They normally buy in even bigger, or they keep playing. But you need to pull yourself out when you've had a bad day. Otherwise, you know, the losses become insurmountable. If you've lost 50% of your account, right? You have to make, what, 100%? You have to double the account to make that money back? So losing 50% does not mean that, you know, all I gotta do is make 50% on the account now and I can get it back. No. You make 100% now on the account to make it back. I think my math's right on that, I don't know. So you can see how insurmountable it becomes the further you go down that rabbit hole. I haven't done one of these teaching streams in a while, but I think hopefully some people are finding it useful. The reason why I'm able to do that, Sev, is because almost every single person in here has gone through exactly what I'm talking about, including me. You're not alone, Sev. Almost everybody in this chat has done this exact same thing that I'm talking about right now. In fact, I would bet money that's the case. Alright, I'm gonna go get another cup of coffee. Be right back. Yeah, Richie, I appreciate you admitting that. Same thing with you, buy crypto, but everybody in here has done it, so. What leverage would you use for average trade? Leverage, so the way risk management works, sorry, is the amount of leverage you use is almost, for the most part, it's not that important. By the way, I've said this before, I haven't talked about this in probably months, but if you want to find out if somebody's actually a good trader, like a profitable trader or not, you ask them the question you just asked me. So that question you just asked me, what leverage is the right amount? That's the question you ask them. If they give you a number, then they don't know what they're talking about. Unless they say 69. If they say 69, then they're gigabrain. But the way it works is the distance between your entry and your stop loss defines your position size. The only time that the amount of leverage you use is important is if you're using isolated or if you need margin. If you need margin, then you can bump the leverage up as long as your liquidation price is further from the entry than the stop loss. Yeah, I think I don't know if the YouTube video is still up, but I think there's a YouTube video of me going through exactly this same stuff. Alright, talk about it in detail. I don't think there's a YouTube video online where I talk about, you know, how isolated leverage works with that dynamic. But just as a general rule of thumb, if you're using isolated leverage, which you should, because there's a multitude of reasons why you should use isolated over cross, but if you are, you want to make sure, like, let's look at this example here, right? If my liquidation is here and my stop loss is here, right? So this is the entry up here. This is where you enter. If my liquidation is here and my stop loss is down here, what does that mean? means that I'll get liquidated before my stop loss will hit. Why is it a bad thing? Well, first off, it's a bad thing because you didn't want that to happen, right? You wanted to invalidate the trade here, but it's also a bad thing because you're paying the spread. Now, if your liquidation price is down here, that should be fine, unless you're on a really big account. If you're on a really big account, then you need enough people who are willing to buy your stop loss from you at this price, or at least before it hits your liquidation. If there's not enough buy orders in the books relative to your position size, then you'll incur slippage and then you'll get liquidated instead of the stop loss as well. So you're on a very big account, you want to give yourself a big buffer, and that's relative to the depth of liquidity in the order book. So if the depth of liquidity in the order book is big relative to your position size, then you don't really have to worry about that. But if it isn't, then you have to worry about that. Most people in chat probably don't have to worry about that because most exchanges have pretty deep liquidity on derivatives relative to the average position size. Like, you know, if your position size is under 1 million, you'll probably be okay with slippage. So disregard that second part. If you might need it someday, though, if your account gets bigger. And then the other thing, yeah, like maybe there are a lot of people in chat with small accounts. Here's the thing. Percentage gains are effective regardless of the size of the account. Percentage gains compound. A small account becomes a very big account if it can consistently compound on percentage gains. Your posts are age restricted in my country? What do you mean? Which posts? YouTube? Twitter? Or this stream? This is like trading 101 though, but the thing is, like, most of this stuff I've had to piece together from different sources and put it all into one. So maybe I should make a series of it on YouTube, because I don't think there is anything out there that's going to talk about implied risk reward, since, I mean, people understand runners, right? But it's understanding runners in the context of high time frame. Actually, you know, Skinner talks about this a bit, but he doesn't go too much into detail about it. But Skinner has talked about this, like the value of runners and that kind of stuff as well. Example of what my Twitter posts look like? Uh-oh, maybe I have to... Maybe I talk to Twitter about that, I guess. Let me check Zcash. Yeah, I talked about Zcash. It'll be in the VOD. Pretty much needs to do it now, here and now. You don't really want to dip lower. There are some instances where you can do it, but because you don't want to go below these previous highs. It's like maybe here, I guess. 573. You don't want to come back down here though. So 573 if it dips, but it's better if it just does it here and now. It's a setting? Okay, so I just have to look at my settings. I haven't used the crypto Twitter account in a long time, guys. It's been over 5 years, probably longer, since I used the crypto Twitter account. Can we do a Gamba? Sure we can. It's a Friday, why not? Let me just make sure I keep the Doom thing in frame. The spooky ghost. It's spoopy. Alright. Alright, if you're new here, this is how it works. You can either bet on the price going through the bull line first or the bear line first. Okay, so if you think price is going to do this, or if you think price is going to do... Oh, fuck. There we go. If you think it's going to do that. Okay, it'll be up for 1 minute. Be at the top of your chat window. really not, the gamma thing's really not good because it could build bad habits for people and like relate the 1 minute movements to dopamine, but people always ask for it in the chat, so give the people what they want. If you can manage to full in, full out trade on the 1 minute candles, yeah, you're really fucking good if you can do it for a while. So I have a lot of respect for Traxy. Because Traxy's been able to do that exact same thing for years, in terms of not looking for the implied risk reward, not looking for the runner, but just go full in, full out. Champ can do it too. I can do it as well, but I don't do it like very often because it's very mentally taxing, and if you're not on your game, you can do serious damage to your account by doing that kind of stuff. Your teachings would blow up on YouTube quickly? I don't know, dude. I feel like most people want the slop. I think most people that get into trading and stuff are probably really impatient people who are just like, all right, sir, tell me when to buy. Where's the what indicator should I use? Should I buy this indicator? Okay, I'm going to buy this indicator and now I'm going to be profitable. I'm sure every person thinks highly of their community, but I certainly think highly of my community because you guys aren't just here for the slop. It might do well on YouTube. I don't know. I think it would probably help a lot of people out. Like, how many people want to click on the thumbnail of the stream when they don't see any indicators and they just see naked charts? Yes, yeah, exactly. It would be a lot of people that are here. It's because they tried other shit and it didn't work. So now they want to learn how to properly do it. Am I wrong? You guys probably looked at all the because I did that exact same thing. Gamba closed, 75k in the pool, 69% on the bear. I just missed hanging with the boys from back in the day. That's acceptable, PJ. You've been an OG for a long time. Which button do I press for free money? The Bitcoin faucet. Go to the Bitcoin faucet website. Okay. Little fragile structure being built on the bottom side here on Biddy, but nice little 1 minute rally, I guess. I can tell you though, probably the biggest issue in the chat for the people that are still struggling is going to be probably risk management and then also following through on execution. Like, how many of you guys have done this before? And by the way, this problem isn't that bad of a problem. It's actually one of the problems that's a good sign usually. How many people in here have been their trade has been sitting in the red, right? So like close to the stop loss, but it hasn't hit the stop loss, and then you close it. You close it early. You don't follow your original plan because now you're emotional that your trade's in the red. It's close to the stop loss. You're like, okay, it's gonna hit the stop loss. I'm just gonna close it here. I'll lose less money. How many people in here have done that? All the time, yeah, right. But that's technically not the worst problem to have because that shows that you're willing to cut losers quick, which is actually it's a mistake, but it's not. It's one of the mistakes that shows that there's actually a lot of promise with your development. Because the other thing that people do, right? The other mistake that people do is the trade will be sitting in the red, right? And then they'll do this. And the trade will be deeper in the red, and then they'll do this. That's a worse problem to do. A reason why you might be doing that, by the way, is probably because you're risking too much per trade. If you put risk onto the market, you need to be willing to, be comfortable with the idea of losing that. Otherwise, you won't follow your plan. And like, yeah, it might take longer to reach, like, to get your Lambo or whatever. But it's a much more consistent path. So like, it's the first scenario I mentioned actually is kind of a good sign. It means that you're willing to get out of a bad trade quickly. But yeah, and then what Colander said, how many times have you done that, right? Where you close the trade too early, or you close the trade when it's in red, and then the price just immediately reverses and hits your profit target. That stings, right? So once you have a strategy, once you have a plan, right? Once you have the set stop loss entry target, once you have the set, then you let it play out. If it loses, it loses. You go back to the lab, you try and get better. The reality is, you're always going to have a trade that loses. You trade enough, you're going to have losing trades. You're really good at risk management, but just really shitty at everything else. That's not a bad problem to have, Patch. That's actually a better problem than the other way around. I think I could help you, Patch. But Patch, the part that you should pay attention to is where I explain the relationship between the high time frame and the low time frame. Here's the thing, right? Once you have a plan and the trade is live, do you think you're going to make better decisions when you're emotional, when the trade is live, or prior to when the trade goes live? You're probably going to have better decision making when you're not emotional, right? So you follow your plan. If it loses, it loses. If it wins, it wins. I mean, that's also true, Kazaki. If you're like trading meme coins, right? Or you're on like 1000x leverage, I guess that's... You could technically get lucky, yeah. At that point, it's like, buy a lottery ticket. Think dude meant, yeah, if he's saying he's bad at his strategy, but he's good at risk management, you're already leaps and bounds ahead of most people. If you can master risk management first, the parts that follow afterwards are not nearly as difficult as that. That's the most difficult part, by a mile. I feel like I'm decent at trading stonks, but I feel like Bitcoin, Forex, and futures trade a little different, especially. Yeah, I mean, the thing about trading stonks is it's very forgiving, right? Like, if you're buying common stock and you don't have a stop loss, most of the time you're just going to get bailed out by the fact that inflation is going up and the fact that the overall market is going up. I know that might sound a little bit insulting, but like if you buy a popular company, even if you buy it at a bad spot, a lot of the time you're going to get bailed out by the market just being really, really strong on common stock. Whereas like trading with leverage, you have to enter at a good spot. You can't just enter, you can't pull the old Michael Saylor and just top blast and get bailed out by the fact that Bitcoin's being traded against the dollar and the dollar's going to shit. Remember words from a wise trader on Market Traders TV: small win is okay, small loss is okay, big win is okay, big loss is not okay. What's up, SK? Sorry. I was in the middle of something, SKs. Yeah, that's a big thing too. Like, once you're on the precipice of becoming really good, a lot of the times it'll feel like the market's coming for your stop loss. You're actually really close if you feel like the market tags your stop loss and then reverses. just try and move your entry to where your stop loss would be. See how that goes. Map out something, right? Map out a trade, and then once you've done that, move your entry to where your stop loss would be. And see if it works. The thing is, you've identified an important area, right? Because if the market reverses really hard from any area that you've identified, even if it's a stop loss, then at least you've identified an area that's important. Usually, if you found a good area to take like a scalp or something, you should instantly get stopped out or instantly go into profit, by like well into profit. Like if the market does this when you've entered, you've probably not entered in a good spot. If the market does this when you've entered, you've probably entered in a good spot. The reality of the situation is the longer you sit in an area, the more other people are going to join the same trade that you're in. And the more liquidity builds on the bottom side of the market. And it's not even about somebody hunting your stop loss. What it is, say the market's doing this, right? It's going down, and all these guys have the same trade. Well, it's the last one to exit that gets the rotten egg. So some of these guys are going to start closing. They're going to start closing. And it's just naturally going to pull it down anyways. Sometimes it might be somebody, you know, hunting for liquidity to be able to fill positions, enter and exit positions without slippage. Other times it's just, you know, the last one to close is the rotten egg. And by the way, it's usually only like, you know, 5% of people that are able to close this in time before everybody gets fucked. And then what happens, it takes your stop loss and goes to the other side. Now it's starting to go up, right? Because these guys are the people on this side are taking profit. The people on this side are taking profit, right? So now when shorts take profit, it's going to be market buys. So boys up here are taking profit, so it's going to be a bunch of buys coming in. Then as it gets closer, it's the same thing on the other side. The last one to close on this side is the rotten egg. The market's now chopped everyone out. In reality, the people that from this side that took profit down here made money, and the people that exited this trade quickly survived. What do I like to do? I like to wait till this shit happens, and when everybody loses, and then I look for here. Or when everybody loses, then I look for here. I don't like taking it in here. It's like a 50-50 which one it's going to clean out first. Maybe it goes to the top side, right? First. So yeah, I mean, maybe I don't get as many trades. Maybe, you know, you get more quote-unquote opportunities than me, but at least, you know, I wait for the probabilities to be in my favor. Like, look at the S&P right now. What do you see? Invalidation's topside, which this is not. We should be looking at the ES to do this properly because the ES is the leverage side of things, but just for an example, validation's bottom side. So these guys are panicking right now. This is a 1 minute chart, so it literally could do either one. Looks like the bears might get it here. It's pretty fucking close, and they got it. GG's, paying out the bears. They got it right there. You need to put yourself in the mind of other people, not just your own, and figure out where their pain points are, and then you can know more accurately where they're likely to capitulate. Alright, there you go. Bears got paid. Okay, so the last one to close here will be the rotten egg. There it goes. They're starting to get tagged out. So what happens now? These guys down here, some of them will start taking profits because we got a new high. So some profit taking. Now, this is an S&P chart, and S&P loves to go up and to the right, so we might never take out the bottom side. Goes back to what I was saying earlier, right? Even if you were to like top blast right now, a lot of times you'll get bailed out by the market just because it goes up and to the right. If there wasn't inflation, only the good traders would survive. The people that are bullish. This is why a lot of the good traders in the chat, they hate moon boys. Because the moon boys always get bailed out. At least a lot of the time. Just hit the fair value gap? Dude, listen, man. What did I say earlier about looking at the 1 minute chart and looking for fair value gaps? You're doing exactly what I talked about earlier. Yes, it might work, but I mean, is it a good trade? No. You remember what I was talking about? Where you're just like looking at low time frame and you're like, oh, we hit a fair value gap and let's go up. Well, it might. Doesn't make it a good trade. And honestly, the S&P is going up, so that's going to help Bitcoin a lot right now. Morphling. A Morphling. Best hero in Dota 2. I didn't really play much Dota 2. I played StarCraft, but not Dota. Played lots of League of Legends, though, which the Dota people in here probably hate that I said that. Morph like water, yeah. StarCraft 2. I played all the races. I started with Terran, as most people do, and then I got into Zerg a lot. You sound sad? No, I'm just a bit tired today. I'm just not as hypey. A bit tired today. Six pool. I did like a weird rush. It wasn't a six pool. It was a weird rush. I forget. It was like 11 or 12 workers into Zerglings. And then if I wanted to get fancy with it, I'd throw some Banelings in there too. It worked best against Terran for sure. Okay, you see these guys just got fucked? So that exact same thing I was talking about, you just saw it happen. Now, it could keep pumping again, because S&P, up and to the right, baby. I just thought we'd get more action on Bitcoin today, so I was like, alright, I'll go live. Maybe Bitcoin will give us more action, I don't know. W key? No, mass Marines into... I could never split Marines that well, though. Splitting Marines was hard. I was good at A-clicking, like, kiting. I was good with kiting with Marines, but the best split I could do was, like, 2 different groups. You watch Koreans play Terran, and they can, like, split, like, 5 different groups on Marines when the Banelings are coming. It's fucking impressive. I've always been better at macro than micro. Probably, you guys can probably see that in the way that I like to trade and look at charts. I've always been more of a macro person. And Zerg is pretty heavy on the macro. So what do you think these guys are thinking right now? So some of them took profit, right? Some of them are like, keep going higher, keep going higher. Don't come back down, keep going higher. The 4v4s, what was that game mode where everybody had to only build one unit? Do you guys remember that game mode? I think it was Archon or something. You were only allowed to build one unit in the 4v4s. That was really fun. Already. Yeah, 2v2, that was what I normally did as well. I've always liked team games. I don't mind solo games either, but I've always gravitated towards team games. I think it's more satisfying to win with a team than by yourself. Alright, let's get the energy back up. Let's play a game of marbles, boys. I owe you guys a game of marbles from yesterday. S-Case, you still here? Come on, boys, get hype. We're playing marbles. You guys ask for this all the fucking time. Yep, get your rigs in chat. Get your rigs in chat. We're going to the gauntlet. It's cold today in LA, so we gotta play the ice map. Alright, here we go. If you're new here, there's a couple new people here today. This is how it works. Type !play in the chat and you can join. You're gonna see a bunch of people do that right now. That's how you join the race. If you're an audio listener right now and you're tabbed out, we're starting marbles. So come get your !play in if you want to join. If you win, I'll gift you a sub to the channel, and then you also get to pick what we all look at next together. If you got here late though, today I actually went through a lot of educational stuff on trading, so it might be worth watching today's VOD, versus like the previous VODs were more about just watching the action play out. But we're kind of in an area where maybe we don't see as much action, I don't know. Let's see what the market gives us. It's a bit gloomy outside today, no sunshine. Okay, I'm gonna give you like 20 more seconds. Good luck, guys. 10 seconds. Here we go. Oh, Timothy, you made it in. 45 of you boys, about a 2% chance. Get ready to type those rigs in chat. I'm rigging it for Radical. Radical X9 is, I'm gonna rig it for him, so if Radical wins, you know it's rigged. Or if a mod wins, you know it's rigged. Alright, here we go. Buy Crypto is in the lead here. But we're into our first obstacle, so it's really anyone's game. D Jinx, an OG of the stream, now has the lead. Master Dog and Buy Crypto still in the top 3 even after that obstacle where we saw that big mix-up. And Buy Crypto looking to retake their lead as we see our first casualties come in. 5 people down, but they're starting to drop like flies. Now we've lost 10 people and they're still dying. Buy Crypto extending their lead with Patch right in the second spot. Real Spooky's also in that top 3. Lamatch, one of our resident comedians in the Discord. I'm always dead, gang. Patch now trying to challenge Buy Crypto and ends up swapping positions with them. The rest of the pack is kind of all jumbled together here, but we have our 2 front runners. We'll see if that changes on the next set of obstacles as Patch starts to get blocked up a bit, and the rest of the pack is now starting to catch up to them while that's happening. But we still have our 2 front runners fighting for it. Come on. The rest of you need to catch up, bro. Don't let them run away with it. If you're still alive, though, you've managed to outlast a third of the people so far, so you still have a shot at it. We're down to 28. We started with 45 here, and they're still dying. Is Radical still in there? Radical, you still alive? I rigged it for you, buddy. You gotta go win it now. Oh, is my mic picking up the music too? Are you guys hearing an echo on the music? My marble is so slow. Buy Crypto, who had a great lead at the start, is still holding it down. Not the best lead at the start, but has really extended it now at this point. IC Pips and Alejandro now rounding out the top 5 with Sweat. Alright, Buy Crypto is going to go for the launch here. Is it going to be good, though? If they go down, it opens the door for everyone else. It looks like they just fell into the void, so now the rest of the pack that's still alive has a chance to win it. Patch going to be our next one most likely to take this jump here. Quantum now finds himself in the top 5. Zhao Tao. Patch is going to go for it. If they fall here, oh my god, what a run from Patch. Is it good? Nope, they fall off. Now it's anybody's game. Who's still alive? 24. We've lost half the people. More people are falling. If you survive this jump, you got a shot at it. There's Jim Jamma. Jim Jamma with a nice line. And Bugatti goes for it, but they have too much speed. And Jim Jamma takes it down. Jimothy wins it. GG. If you didn't win, remember to type rigged in the chat. Because obviously, Jim winning is rigged. What's up, Jim Jamma? You still married to Pam Beasley? Alright, I'll gift you the sub. Jim, I think you know how this works, right? So you can ask for any Fin instrument, any ticker in the chat, and we'll all look at it together. Remember, if Jim asks for something you don't care about, I'm gonna analyze it the same way I would pretty much anything, depending, unless it's a common stock. Oh, chat can pick. Okay, first one in chat to ask for something. That's what we'll all look at together. Abercrombie. What's the ticker for Abercrombie? A&F. Okay, let's have a look. Okay, good volume but equal lows. Oof. Alright, so looks bearish, but not really the best spot to short just yet. We have to let it come up. So we got a bunch of equal lows. Structure looks pretty good though. Looks pretty fluid on the bear side. So that's beautiful. That's beautiful. That's nice. That's pretty good. Okay. So 2 areas to look for if it pops back up. Obviously want to squeeze these guys out, maybe fill a gap, who knows, but first area to look for is a clean wick off this one at around 85, and then a dive into liquidity here. It's kind of a tight range because you should have what happens here. So diving into liquidity here would be the second one. So wait for it to dive above 94. If it fails it, then look for the retest at 94 and then dump, or just a clean wick on 85. Longing it right now is pretty much the only play you can do, but it's not a good one because you're going to be sharing invalidations with all these guys here and these guys here. So you kind of want to see a pop into a drop. Yeah. Volume's pretty good though. You do have stack liquidity on top side too, which is nice. So it's a little bit neutral. Right? You have stack liquidity top and bot, but you yield to trend, which is down. So the bias for it's not super strong, but the structure is really fluid here, which is pretty rare for a common stock. And then if it dumps before tagging this, then potential for long opportunity because it went straight up, right? So there's a void there. So it should, if this breaks, it should doom arrow. If it doesn't doom arrow and you see something like this, then long opportunity. Here, on the retest. If the volume's good too. What you really, ideally, if this thing falls out and it doesn't go to the doom side, and you see a big spike in volume, particularly bigger than this volume would be ideal, but it doesn't need to be bigger, just a huge spike in volume and it regains and starts reverting back to the mean, then you look for the retest, because it's a strong downtrend, right? So there's a good chance they'll give you the fill here. And then you'd form new structure. So after that, then you'd look, if that all plays out, it's kind of hard, but you'd look at here next. If you get a high higher than this high, then you would look for this. Then after that, again, you'd look for that. But you need to get a high, you pretty much, at that point, the trade's kind of done. You'd have to pop the top. Yeah, you want to give you want to give yourself at least, for this one, if you're doing options, you want to give yourself a pretty big expiry on it. It's a pretty high time frame chart. So like, 90-day expiry would be ideal, somewhere in that ballpark. At least 90, maybe a little bit more. But if you found like a CFD where you can short it, then look for decent spread when it's in good spots, I guess. Someone just fat finger on Binance? Which one, on BNB? Or on Bitcoin? There's no fat finger on Bitcoin. The BNB just fat finger? No. Your chart's trolling you. I don't know which chart you're looking at, though. If you're looking at Bitcoin against Tether on Binance, no fat finger. But yep, that's Abercrombie. I don't trade this personally, though, just so everyone's aware. Not financial advice. Oh, on the perpetuals? Let's see. No, not on the perpetuals. They're trolling the chat? Maybe. I don't know. El Cool Bro doesn't usually troll a chat. All right, boys. I'm gonna call it today. Have a good rest of your Friday. If you're new here, here's the link to the Discord. Join the Discord. The VOD today is pretty good. If you're a trader in the chat, and you might want to check out today's VOD. Let me get some GGs in the chat. Today's VOD, I go through a lot of the really important stuff for the traders in the chat. If you're just a buy and hold guy, you might not like today's VOD. But if you're a trader, check it out. Leo should be posting this VOD either later today or tomorrow. The rest of the VODs from this week, if you just want to see me be right about calling the dump, then you can check that out. But today was actually probably worth the watch if you got here late. Alright, boys, be safe out there. Use good risk management. Wait for the price to come to you. Remember, you can know where it's going to go next, but you have to wait for to take the other side of the worst. Like, you could know where Abercrombie, it looks like it's going to dump, right? But it doesn't look like a good trade to short it until it goes high. If it doesn't go high, then you don't lose any money, you just miss out on the dump. And then you could have an opportunity for a pump, depending on what happens down there. Remember, you're not limited to one financial instrument. There's thousands of them. If you can't find a good trade on one, look at another one. While doing that, bear in mind that usually most assets will yield to the bigger market caps. So regardless of what you're trading, unless it's a currency, regardless of what you're trading, you should be looking at the S&P. Currencies and commodities, actually, you don't really need to look at the S&P, but if you're trading like an individual common stock or you're trading a crypto, you should be looking at the greater market sentiment from Bitcoin and then also from the S&P 500. Alright, boys. Till next time. Probably Monday. We'll see. See if I'm busy or not. But yeah, if you're new here, I usually don't stream on the weekend. So you got the weekend off, boys. Until next time. GG's, fellas. Also, if you want to know where I'm looking for on Bitcoin next, it should be in the recording at the beginning. And then if you want my opinions on gold and stuff, that's near the beginning too. Gold's doing really well. It's followed the plan nicely. Same thing with silver. Although silver's kind of struggling a bit right now. You can still get the retest of it. Retest 50, 58, 2, and then pump it.